Once the information has been collected, collated, and examined, we can prepare the final due diligence report for the client. This involves sorting and reporting on the conclusions reached during the document review process, both the objective and subjective determinations. The most important part of the report is the executive summary, a short 1 or 2-page summary of the key findings of the due diligence exercise. This means laying out the most important parts of your conclusions and highlighting them, and briefly providing a report of the other areas considered during the examination. It must be appreciated that this executive summary should be submitted as a deliverable-ready document. Remember that you are writing this executive summary for a board of directors and the managing director and the CEO. They are the decision makers and hardly have any time or the endurance to read through perplexing or peripheral detailed content. Transmission of the content is plainly, simply, eloquently, and as concisely as possible is as significant as the content itself. This is then followed by a more in-depth report on the findings, detailing the information found during the examination of the target. Every bit of information collected and examined should be reproduced for the client. This will be read by the in-house legal and accounts team and perhaps sales, marketing and acquisition team, and many business managers as well. The primary objective for any report should be ease of use for the client. This means that the format and ordering of the document must be tailored to the client's needs. We do this by positioning up front any pertinent or unusual information uncovered by the exercise. Anything which needs to be known by the client in order to make a decision has to be made abundantly clear in that report. The detailed section of due diligence reports must cover the following sections or chapters. As all these have also been discussed in the past lectures, I will not be repetitive here. First section should be fiscal matters. The client will be anxious and apprehensive regarding the target's past and present financial statements, and as well as the reasonableness of the target's forecasts of its prospective performance. Even if you were not assigned financial due diligence, you must give an overview of the financials based on the statutory filings. It could be factual with no assessment. Point 2 should be organizational and corporate and regulatory matters. The entire documentation of organization of the target as to its legal nomenclature need to be discussed here in this section, along with the regulatory compliances of the past minimum 10 years. Section 3 could be marketability and title of assets. You need to give a thorough title investigation report on each and every asset of the target, be it movable or immovable. Immovable means plots of land with buildings thereupon. Movable would mean plant and machinery, capital goods, vehicles, etc. Section 4 should be intellectual property rights. You need to cover in great detail what domestic and foreign IPR does the target have, whether registered or applied for or yet to be applied for registration. Has the target taken suitable steps to safeguard its intellectual property rights? Has the target received any license to use any IPR or granted the same to any third party? These are all very important for the purposes of valuation and legal stability of the target and the consequent transaction. Section 5 should be commercial contracts. This is highly tedious, yet very relevant. Appraisal of all commercial contracts and obligations of the target. The kinds of contracts that are imperative to evaluate, according to me, may include guarantees, loan agreements, financial documents, credit agreements, customer and supplier contracts, agreements of partnership or joint ventures, settlement agreements, indemnification agreements, service and employment agreements, exclusivity agreements, real estate leases, sale deeds, equipment leases, license agreements, power of attorney, royalty or franchise agreements, distribution, dealer or sales agency agreements, non-competition agreements, and so on. Section 6, also being very vital, should deal with employees and management issues. The client ought to know the worth and quality and competence and capability level of the target company's organization, including management and employees. This may also include any human resource disputes and issues. In other words, labor or industrial disputes or employer-employee disputes. Section 7, again very vital and significant, should deal with litigation part of the target. A synopsis of all litigation matters, whether pending or threatened or settled, need to be highlighted explicitly. Further, any arbitration or government or penal or regulatory proceedings involving the target ought to be highlighted along with any legal notices received or issued by the target. So this is quite a fundamental section. Then is section 8, which deals with tax matters. Tax due diligence is also a serious matter requiring exhaustive reporting. Then coming to section 9, in today's time, this is again a very vital section dealing with anti-competition, antitrust, and anti-cartelization issues. In the current scenario, competition laws and laws against unfair trade practices and monopolistic trade measures has assumed huge importance. A systematic check would be required, and one would also need to do a check on the documentation contemplated under the transaction concerned. It should go through the test of competition laws. Moving on to section 10. This you could brand as miscellaneous, yet not miscellaneous in the ordinary context of dictionary meaning. This is a head where you could actually cover each and every information which may not be covered under the previous heads. This is an important section. This category would cover anything and everything which you noticed and thought apt to bring it to the client's notice. So friends, finally in the culmination part, you will mention your crux or recommendations. This will be read with your executive summary. Hence, it's very relevant. This will have 3 parts. 1, the issues of serious nature, which you want to flag as red. These will be those issues which are serious and either unresolvable, except perhaps resolvable by compounding or admission of guilt on payment of heavy penalties and damages by the target, or not resolvable at all. This is the red category. Then second category would be a yellow category. Issues which according to you are of grim nature or grey nature, seeking resolution, whether as conditions precedent to the transaction contemplated or otherwise. These issues would be capable of getting resolved and sorted out for sure. Third category would be green category. Well, if it is green, why do we need to have a category if it is clear of all infirmities? It is important because these are those issues which are procedural error-based issues. Issues of routine nature, like delay of a week in getting building painted as prescribed by the local industrial authority. The authority could impose a minor fine for a delay of 7 days with a maximum fine of INR 5,000. It's a minor error, but yet it needs to be flagged as green. Now, why are these flags important? These are important because these flags will help the client to understand what they could be getting into if they were to deal with these flagged issues. This will assist them in taking a proper business and commercial decision and when making a call necessary at a particular point. This will help in proper valuation of the deal. This will help in building up a set of conditions precedent to the deal. This will help in proper visibility of the commercials, economic, and legal scenario.